Well, so we really want to talk about that. This is important. So let me talk to you about business loans for fair credit from a big bank. Okay, so I want to compare and contrast five players today. I want to compare Truist, Wells Fargo, Bank of America, U.S. Bank, and Regions. Don't you go anywhere. You're going to love today's conversation, I guarantee it. Welcome back, folks, to another edition of the Awesome Story Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or a tea or vodka and let's roll. In today's conversation, I want to do a comparative analysis, okay? We are going to compare Truist, Wells Fargo, Bank of America, U.S. Bank, and Regions. And the thing is, we are going to compare those institutions from the point of view of business loans for fair credit from a big national bank. And I want to start with Truist. So now the thing what we love with Truist is that Truist they offer, I would say, personalized service. So when you want to apply for a business loan with this institution, they will assign to you a relationship manager, and that relationship manager will work with you. One thing we love is that they're really fast in reviewing your application. The only thing is they do ask lots of documentation. That's what it is. So when you go with Truist, you better make sure that you are ready to provide a lot of documentation. And but their small business loan, you can actually borrow up to $100,000, okay, and up to 60 months, and that's the term. And but overall, this is a great institution. They do offer low fixed rates, but those fixed rates, again, they come with some caveat. You need to provide lots of documentation. I'm talking about business tax returns, business financials. Sometimes they will ask to see some business plan. They want to see market trends in your sector. Okay, and one thing we love is that they, especially for the unsecured loans, they do ask a lot of documentation. But for the secure loan, they are more flexible. Okay, and what we love with Truist is that you can choose the length of your loan. They are kind of flexible in that because they trust you, especially if you have a relationship with them. That's kind of cool. Okay, so you can actually choose the length of your loan. You can track your balance online. You have better rates, and in some cases you might benefit from auto pay. So they'll give you a discount on the interest rate that they are charging you. Okay, so a Truist business loan is great if you want to make a one-time purchase. Okay, let's say you want to fund a specific project or initiative. This could also be a great opportunity to get a loan from them. Again, remember, it is up to $100,000. Okay, you can use the cash to consolidate debt. You can lock in a better interest rate by refinancing. Okay, and now if you are looking for commercial lending, let's say your business performance is kind of high. You are making annual revenue over $2 million. And you have borrowing needs that exceed $250,000. They do have a great strategy for you, but you have to be transferred to their commercial lending department, not their small business lending department. Let me talk to you about Wells Fargo. So Wells Fargo they do have a national footprint. Everybody knows that. And with Wells Fargo, the thing here is that they also assign to you a personal relationship manager. But things are slower with Wells Fargo. So let's say if Truist were to approve you, let's say within 3 days, Wells Fargo might take a week. In some cases, 10 days. They also ask for lots of documentation. That's something you got to be ready when you apply with Wells Fargo, okay? Especially if this is the first time. And Wells Fargo does not offer a business loan. They offer a small business line of credit. Okay, so it's not a loan, it's a line of credit. And so the amount ranges from $5,000 to $100,000. Okay, that's a revolving line of credit. There's no annual fee for the first year, and their APR is kind of low. I mean, based on our research, the APR can go as low as the prime plus 1.75%. And this is an unsecured line of credit, so no collateral is required. Okay, and what we love with Wells Fargo is that you can actually benefit from the whole transaction if you enroll in their free rewards program. Okay, this is kind of cool. And so you have with the Wells Fargo so when we talk about Wells Fargo business lines of credit, there are two. You have the Wells Fargo business line of credit, and the Wells Fargo small business advantage line of credit. So this is actually great for expanding your business, covering unexpected expenses, and supplementing cash flow. And each program depends on the level of activity that you have. Okay, so there are other features that you have that come with the Wells Fargo line of credit. You have MasterCard, Access Card, easy to use checks. You can access the line online or by phone, and there are no foreign transaction fee. Okay, now for the Wells Fargo business line of credit, you are looking at $10,000 to $100,000. Okay, and the thing is that this line of credit requires personal guarantee, though. So that's one thing you got to be ready. You need to provide personal guarantee. And the one other thing that I want to say is that you need to make sure you have a strong relationship with Wells Fargo, because overall, Wells Fargo only grants high limits, high line amounts to their existing customers, and we're talking about being a customer at the personal level or at the business level. Let me talk to you about Bank of America. Folks, we are still speaking about a business loan for fair credit from a big national bank, and we want to analyze Bank of America's offer. So with Bank of America, again, we have another bank that has national footprint. Okay, you are looking at a loan amount that goes from $10,000 to $100,000, and in some cases to $250,000. Okay, and the thing with Bank of America is that they do charge an origination fee. Something you need to be clear about. Okay, they charge it's about $150. Okay, now they only charge it when you are approved. So don't worry, they're not going to charge you $150 to reject your ass. No, they'll only charge the loan that amount when you are approved. And the only thing is that Bank of America really is it's a little the conditions are a little stricter. So they want you to have 2 years in business under existing ownership. So if you are a startup, you can't qualify unless, again, you have a strong relationship at the personal level with Bank of America. Otherwise, they want you to have at least 2 years in business and under existing ownership. So they will check to make sure that they will check your statement of equity or stockholders' equity to make sure that the owners they have remained the same for 2 years. And they want you to have $100,000 in annual revenue. Okay. So when we talk about Bank of America, we have unsecured business line of credit. We have a business loan. So business loan starts from $10,000. An unsecured business line of credit starts from $10,000. Okay. So you really want to choose whether you want an unsecured business line of credit or you want a business loan. It's totally up to you. It depends on your liquidity needs. Okay. And with Bank of America, you have a constellation of loans, not just the small business loans and business lines of credit. You can also fund your commercial real estate through them. Okay. They also have so for commercial real estate, amount starts from $25,000. So this is really good. They are very generous, though. The Bank of America is really generous when it comes to giving you loan amounts for assets. In other words, when you are collateralizing the loan, things become a lot easier. So they offer commercial real estate loans. They offer equipment loans. Here also, the loan amount starts at $25,000. Okay. They do have secured business loans and secured business lines of credit if you want to go that way. In other words, you want to collateralize the unsecured loan and you want to transform it into a secured business loan or business line of credit. So it's totally up to you. But once you actually collateralize the loan, the interest rate tends to be smaller. Okay. Let's talk about U.S. Bank. Now, one thing we love with U.S. Bank is that they do have a national footprint, but they are focused in certain industries and in certain geographies also. It's important to make sure that you find the right connection, the right harmony between those geographies and those sectors that U.S. Bank is really strong at. And one thing with U.S. Bank, you have several products, okay? And you need to make sure you find the right one. So they have the U.S. Bank Quick Loan. So this is a loan where you can borrow up to $250,000. Okay. And if you have a U.S. bank relationship, if you have a deposit account with them, you can actually apply online for this business loan. You don't have to go to a branch. You don't have to go on the phone. You don't have to pick up the phone. You can apply at the branch. Sorry, you can apply online. Now, you always have an option to apply at a branch, and we actually recommend that you apply at a branch to get some intel about the process before applying. Okay, and you can use a quick loan from a U.S. bank for general purposes, equipment, or purchasing new and used vehicles to help your business grow and thrive. So the thing here is that the amount is kind of generous. I mean, $250,000. Think about it. This is really good. So actually, the loan amount starts from $5,000 and go to $250,000. Okay, and maturity can go all the way to 7 years. This is really good. 84 months, fantastic. Okay, and there is no origination fee. We love that. Okay, and one thing you need to understand is that you actually it really depends on one thing you need to understand is that U.S. Bank will file a UCC lien and must be in first lien position using all business assets as collateral. So, this business loan is essentially a secured business loan. It is not a secured business loan in the sense that you don't pledge an asset, but they will file a UCC lien anyway to make sure that they, if something happens, they can cover, they can mitigate risk. So you do have also the quick loans is there, right? $250,000. That's the maximum. You also have the business term loan, where you can actually get up to $1 million, but this is a secured business loan. So you are securing the loan with business assets. They also offer commercial real estate loan up to $10 million. They have government-backed loans. Those are the SBA loans, okay, up to $12.375 million. And they also offer equipment financing up to $500,000. So you have a variety of business loans that U.S. Bank offers. I want to talk to you about Regions. So Regions Bank, okay? So when we talk about Regions Bank, we're speaking about a relatively smaller player, even though they still have a national footprint. And in other words, they can lend to you no matter where you are, as long as you have the relationship with them. But the thing is that they are smaller compared to the other four, okay? And when we talk about Regions, you have small business loans and lines of credit. The only thing with Regions is that they also ask for documentation, but they are way smaller. They are way smaller and slower. And their loan amounts are also, they tend to be smaller. We're talking about $100,000 for small business loans and lines of credit. And if you're really lucky, you might go to 150, but you got to be strong. You got to have strong financials, okay? In some cases, in some very rare cases, we have seen them finance deals for small businesses up to $500,000, but those are really rare, okay? And they also offer SBA. So, and SBA loans are, I think, the amounts are more generous because you have the intervention of the government. So the SBA is actually backing those loans. As long as you qualify for those loans, you might get a higher amounts from Regions and other banks for that matter, okay? Regions also has, they do have an interesting setup. If you are looking for equipment financing or leasing, they actually do not provide that in-house, but they have another company, which is actually a subsidiary of Regions Bank that offers that. And the company is called Ascentium, okay? So they provide that entity, Ascentium Capital. They provide streamlined financing for equipment, technology, commercial vehicles, and other business items, okay? And that's the thing. So for some reason, Regions wanted to segregate those activities from their core activities of lending and banking for businesses. And so I just want you to know that, because if you're looking for that kind of financing, you're going to have to actually be transferred to another entity, okay? But overall, if you're looking for one thing that Regions is very good at is their customer service, honestly. If you are looking for a business loan or line of credit, you can call, and you want that service by Regions, just call 1-800-REGIONS. Yeah, 1-800-734-4667. And they will actually assign a Regions banker to you, and that person will answer any question or or any questions or concerns you might have. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Story Kiwi Show. We're also having a conversation. We are actually doing a comparative analysis of five banks when it comes to business loans for fair credit. Okay, it's really important. Before I give you the answer to which one we chose, it's important to understand that when we talk about small business loans offered by banks, those products come with a variety of requirements. Okay, and it's important to make sure that when you want to, let's say you want to apply successfully for any of these products, business loan, business line of credit, you basically have to work on a few things. First of all, you want to build personal and business credit. Okay, it's important. You want to pick the right business structure. You want to get your EIN, really important. Okay, this is this is quintessential. You want to open a business checking account. We always talk about establishing a strong MPR, multi-product relationship with the institution where you want to get a business loan from, or a business credit card, or business line of credit from. Do business with vendors who report to the business credit bureaus, the net 30 vendors, or net 45 or net 15. And you want to monitor and repair your business credit profiles with Dun & Bradstreet, with Equifax, with Experian, with LexisNexis. Okay, and write a business plan. You want to write a business plan. Boss, I'm talking to you about that because a business plan allows you to actually get a business loan. Okay, I'm not saying it's the only criterion that lenders will pay attention to, but having a business plan reflects structure, reflects stricture, reflects stricture in the sense of discipline. Okay, reflects structure in the sense of organization. It's important. Okay, and you can write the plan for a loan. Okay, and one thing is that you can also try to put forward collateral here. If you do have collateral, why not? There are a lot of here are several types of collateral you can actually put forward if you have them, though. Real estate. I'm talking about a parcel of land, developed or not. Other real property. I'm speaking about cars, equipment. If you're looking for a cash secure loan, in other words, you have enough cash to secure the loan. Inventory financing, invoice collateral. We're talking about accounts receivable financing, or accounts receivable factoring. And so those are things you need to think about. Okay, this is really important. So my point is that the steps that you need to follow to get the business loan are the same, whether you are applying at a bank, at a regional bank, at a national bank, at a community bank, or at a credit union. Other things you need to do is you need to choose the right loan and lender for your business. I mean, we hear a lot of people just, I just need a business loan. I need a business loan. I'm going to apply for any business loan. No, sister. No, brother. You got to be selective here. You got to be selective because, first of all, you need to understand what kind of business loan you're looking for. I mean, going on the days where you just walk around and just, I just need money. I need money for my business. Okay. I don't care whatever it is. I don't care how you structure it. I just need the cash. No, this is amateur. We need to really be more selective here, because when we talk about business loans, you have a constellation of funding programs, right, brother? Right, sister? Right, uncle? So you have business term loans, you have business lines of credit, you have SBA loans, you have short-term loans, you have merchant cash advances, you have equipment financing loans. What do you want? What kind of financing program are you interested in? Okay. And it's important. So once you choose the right loan and lender for your business, you need to gather and organize the required documents. I'm speaking about the paperwork. And I was talking to you today about some banks that require lots of documentation. That's just what it is. You got to play by the game. You just have to play by the game's rules. I mean, there are some rules, and you just got to abide by the rules. Okay. When we talk about loan documents, business loan documents, the common ones, we are speaking about tax returns, bank statements, cash flow statements, income statements, also called P&L, okay, profit and loss statements, your balance sheets, your business lease, government issued ID, business plan, business certificate or license. Okay, and it's important that those things that I'm just talking to you about, you just need to provide them digitally if you have them. You don't have to print them because some banks are comfortable with you sending them the info via email. That's fine. Okay. And so once you have that, apply for an SBA loan if possible. What I'm trying to say is that you first want to apply for an SBA loan, and if you are rejected, then you want to apply for a regular loan, because an SBA loan is kind of cool, even though the conditions are stricter. The interest rate is lower, and the approval process is a lot easier if you qualify, and the government is backing you up. Okay, and one thing I always want to say is, if you're applying for bank loans from big national banks, you want to do things at the branch. You want to dress professionally. You want to ask to speak with a business loan officer. You want to explain that you want a business loan. You want to answer questions that the loan officer asks you. Okay, you want to actually dress to impress, and you want to prepare yourself. Do things at the branch to boost your chances of approval. So now we'll have to decide: Truist versus Wells Fargo versus Bank of America versus US Bank versus Regions. Which one should you choose? That's a big question. Well, it really depends. So you're listening to me right now. You have an S corp, a C corp, an LLC, an LP, and whatnot, and you're thinking about those 5 players, and you want to decide. Well, first of all, make sure that you nail down why you need the loan in the first place. Why do you need the loan? Is it for equipment financing? Is it for inventory financing? Is it for general transaction? Why do you need the loan? Okay, and you need to figure out how much you need, because not all banks approve the same amount. I was telling you earlier that Regions, for example, is kind of limited in terms of the amount that they grant on loans. So how much do you need? This is important because small business loans come in lots of sizes. We're talking about hundreds of dollars to millions. Okay, so think about that. And one thing I want you to really think about is to take an honest look at your credit worthiness. When we talk about your credit worthiness, I'm talking about 2 things here, and that duality is important. I'm talking about your personal credit score, okay, and I'm talking about your business credit score. Now, speaking about your business credit score, you have to make sure that you find the perfect balance here between your payback score and all your other credit scores from Equifax Business and Experian Business. And what is your annual revenue? How long have you been in business? For example, I was just telling you that Bank of America and Wells Fargo want you to be in business for 2 years at least. Okay, so those are things you have to think about. And you need to explore your lending options. So when we talk about exploring your lending options, you want to make sure that you start with an institution with which you have a stronger relationship. So let's say you have a relationship with Wells Fargo, with Bank of America, with US Bank. And so you want to choose the one where you are stronger, where you have parked lots of your cash, where you have several transactions, you have a certain volume of transactions with them. Okay, so this is what you want to choose. So it's important to always do that, and so you can decide and apply. And that's the last step here. So you decide, whether you have a stronger relationship with Truist or with Wells Fargo, with US Bank, and whatnot. So always apply at a branch. Always apply after talking to a business loan officer, so you have lots of intel about the process, so that you can boost your chances of approval. All right, so after analyzing those 5 lenders, US Bank, Truist, Bank of America, Wells Fargo, and Regions, our pick is US Bank. So we have scored US Bank 10 over 10, Truist 9.5 over 10, Bank of America 9 over 10, Wells Fargo 9 over 10, and Regions 8 over 10. Thank you so much for your attention. I will speak to you another time, but until then, remember, stay marvelous.